It's 2025 and some of us have started to receive our paychecks for the year in 2025, and I thought it would be good to do a good rundown of what the tax bracket changes are for 2025. And I know we're well into 2025, today is the 18th, but if you have received your paycheck and you're wondering what's the difference, or you're yet to receive the paycheck, we're going to cover some of those tax changes in this video. Starting off with the federal income tax bracket changes, there's a 2.7 inflation increase. To account for the 2.7% inflation increase, the federal income tax bracket has gone up. There's a 15% on incomes up to $57,375. Anything in that range up to $57,000 will get taxed at 15%. Between that and $114,750, there's a 20.5%, an increase from last year. And I'm going to link all of the 2024 federal below and some of the provincial as well, because we might not be able to cover all the provincial in this video. So I'll link the provincial tax bracket changes in the description if you're interested in some of that. There's a 26% between $114,750 to $177,882, 29% between $177,820 and $253,414, and a 33% in income tax on everything above $253,414. It's also important to note that Canada is a progressive tax system. What that means is, if you make like $65,000, you're not going to be taxed 20.5% on the entire $65,000. You're going to be taxed 15% on the first $57,375, and anything above that up to $65,000, you'll be taxed the remaining 20.5%. A lot of people get that confused, thinking if they get an increase in salary, so does their tax bracket holistically. You'd only get taxed on the portion that's above that. Now, there's a basic personal amount that's increased to $1,629 for 2025. What this means is any amount you make under $16,129 won't get taxed on a federal level. Going into changes with CPP and EI, there's not been a lot of changes in the CPP range. Contribution rates still remain at 5.95% for employees and employer. The 2024 maximum would be in the description below. What this means is the maximum contribution to the CPP, the Canadian Pension Plan, now goes up to $4,034.10. For both the employers and employees, they both make the contribution to the CPP on behalf of you working. Self-employed individuals will make the full contribution of $8,068.20 because they don't have the employer matching half of the CPP payment in their account. Now, remember last year we talked about the second CPP tier for people who make a little bit more money. Earnings between $71,300 and $81,200 will be subject to an additional 4%. So if you make above $71,000 up until $81,000, you're going to see that additional 4% contribution rate come out of your paycheck. The contributions will be $396 for both the employer and employee, and $792 for self-employed people. We talked about it. This again started sometime last year or the year before. It's to help increasing inflation. The government is, collecting that CPP payment for people who make a little bit more money, so that when it comes time to retire, they can get a little bit more benefit at the end of the month. Now, within the employment insurance category, there's an increase to 1.64% on insurable earnings up to the cap of $65,700, resulting in a maximum contribution of $1,077.84 a year. This is an increase from last year. Now, over to the TFSA and RRSP category, the government of Canada reviews how much you can contribute to your tax-free savings account. Again, remembering that the tax-free savings account is an account that you can put money to, invest, and not get taxed within the account. You can put the money in a regular DISA account where it will serve as just a savings account, or you can put the money in a investment portfolio TFSA where you can invest the amount in the TFSA with mutual funds, index funds, ETFs, whatever you like. This year, the contribution remains at $7,000, bringing the total amount of TFSA contribution room to $102,000. If you haven't contributed ever to the TFSA, you're allowed to contribute that $102,000 of eligible room. Now, if you've withdrawn from your TFSA in 2024, you get that contribution room back in 2025 to contribute to and remax out the account. It's a really good account. Take advantage of it. It allows you to invest again without getting your investment taxed or capital gains. You get your proceeds deposited back into the TFSA. On the other hand, the RSP contribution limit has risen to $32,400 $3,690 for 2025. I think it was around $31,500 in 2024. I'll put the exact information in the description, but $32,490 in 2025 for the RRSP contribution. The RRSP, again, different from the TFSA, allows you to put money into the account tax-free, invest, earn proceeds, increases tax-free, but you can't withdraw that money until you retire in Canada, but you can invest, and it's like it's a retirement account. It's the Canadian equivalent of the 401k. You can put money in, invest, and gain some proceeds there. The old age security OAS has increased to $93,454 for 2025. There's also been some changes to the capital gains tax and the economy. There's a proposed increase on capital gains inclusion rate, which has not really yet been enacted. The proposal suggests that there might be an increase to 66.67% from the previous 50% that we've seen for quite some time. From the previous 50% for individuals with capital gains exceeding $250,000 in a year. What this means is there's going to be an increase in the portion of capital gains that you pay tax on. Right now it's about 50%. You pay tax on 50% of capital gains. For people who make over $250,000 in capital gains, there's going to be an inclusion rate of 66.67%. There is a goods and services tax holiday, which we're kind of in right now. The government proposed a suspension of GST and harmonized sales tax for specific goods to kind of provide a relief during the holiday season, and they kind of dragged it out to last February 15th thereabout. From what I know, there's a relief on children's clothing, toys, restaurant meals, alcohol, some other stuff. Again, I'll try to link them in the description if you're interested in that read. It's supposed to help people with increasing costs and living expenses on the rise so that there's a little bit more money to spend on these things. But again, not to get political, we'll just leave it to the facts here. So this one, I think the government has really taking a good look at and made some substantial increases. The home buyers plan hasn't been around for too long. It's similar to your TFSA, but specifically for people who want to save money and invest tax-free for home purchases. There's an increase for the withdrawals. In 2025, you can now withdraw $60,000, and the previous amount is $35,000, which in this case you have 15 years to pay back, which kind of makes a lot of sense, because if you look at what the down payment required is for many homes, $35,000 might not do a lot of good. If you're buying $1 million home, $35,000 is a drop in the bucket. If you're buying a $500,000 home at 20% again, $35,000 is also still a drop in the bucket. So the increase from 60 grand, it's substantial. It's good. It could be a lot higher for people who want to make bigger purchases, but this is in addition to all the other tax-free savings opportunities. You still have the RRSP, which you can do the withdrawal from home for the home buying process as well, the home buyers plan, and the TFSA, all which you can save money tax-free for home buying. With inflation and the tax bracket increases, people might not notice any difference, maybe a couple dollars, if at all, in their paychecks this year. To account for inflation, the tax brackets have changed, so you might not notice that shift at all. And those are all of the changes. If you enjoyed the video, like, comment, and subscribe, and I'll see you guys next time. Cheers.